Everyone. My name is Piers Ridyard. I am the CEO of RDX Works, a core developer of the public decentralized ledger entirely devoted to decentralized finance. And I have with us an incredible guest that I'm going to be interviewing with you for this fireside chat with Lane Kasselman of blockchain.com. Lane, please do give yourself an introduction.
Thanks so much, Piers, and nice to be here with everyone. So as Piers mentioned, I am the Chief Business Officer of blockchain.com, and we are one of the largest crypto companies in the world. And if you're watching this from Nigeria, you likely know who we are as being, if not the largest, I think one of the largest in Nigeria and certainly in other parts around Africa. Blockchain.com is a full stack crypto services company, and so much so that now we're a full financial services company. So we operate in over 200 countries. We're about 10 years old, and we have 83 million customers around the world. We have tens of millions in Africa, and that's growing fast every month. You should note that we're not just a retail business, although we offer half of our business in the form of retail products, crypto brokerages, as well as an exchange and various interest products, and of course our blockchain explorer, the original search engine for crypto. But we also have quite a large institutional business, which makes up the other half of our practice. We have a prime brokerage, as well as asset management products. So that's blockchain in a nutshell.
That's really cool. All right, so let's dive into the topics that we have. So first and foremost, I think that right now there's a renewed interest and attention on the potential for increased regulation in the crypto space. There was a recently signed executive order in the USA, which certainly made some people a little bit shaky. And I think there's sort of good arguments on both sides of the fence here. Some people are like, regulation is really important. It's something that should be pushed further. Other people are like, no, don't regulate the space. The space doesn't require any regulation, and regulation would be a bad thing. I think there's some good arguments on both sides. I know that you, Lane, you speak sort of very eloquently about sort of the need for the right kind of regulation. But I think what will be really interesting is a debate format, if you're happy to do that, where I will take the position that regulation is entirely unnecessary in crypto, and you will take the position that regulation is a good thing and we should welcome it. Now, just as a preface, because this is a debate format, what we're saying isn't necessarily what our views are, but it helps make sure that the argument flows nicely. So I'm going to let you open the floor on this. And let you start with why regulation in crypto is a good thing. And then I will respond, and then you can respond to my response. And then one more time, I'll respond to you. And then we'll have a discussion afterwards to see where the arguments took us. Does that sound good?
Yeah, I love it. This is a great format. Good idea. All right, so I should just jump into it, yeah?
You should just jump into it, yeah.
Okay, great. So the crypto ecosystem is roughly a decade old. Fortunately, my company started out when it first became a viable business, but it has grown into a substantial part of our global economy. Total global assets, right, things that are owned, are about $500 trillion. So that's sort of how you think about the size of our financial system around the world. Crypto is 1.5 trillion of that. So it's still very small, but it's growing rapidly. And its presence in total global assets is expected to exceed 2 trillion this year. And so what does that say? Well, it says the financial sector is changing in ways that it never could have imagined. In some markets, crypto is replacing traditional finance, right? In some places, even in Africa, where traditional banking is either not trustworthy or not available, crypto has replaced it. In other parts of the world, though, maybe in Western Europe, there's a strong financial system that doesn't need replacement. But the reality is there is a need for crypto in all of those markets, but the use of it differs from market to market. So then the question you're presented with is, how can we ensure that crypto is being managed and executed in a very equitable way across all of those markets where the use cases differ? And generally, when governments and countries and populations have been faced with that question in other areas, the solution has been in the form of regulation. And regulation does two things. Generally, it's designed, one, to protect consumers, the very people that helped put people in office and the very people who regulation is meant to help govern and protect. And it also creates guidelines, a playing field for those companies to operate. All right, so all of that was quite ethereal. Let me get very specific. Crypto has existed in a regulatory gray area for nearly a decade all around the world. And that has been a combination of places that have been very aggressive in regulation and places that have had no regulation. And for companies like ours that are growing rapidly and want to deliver products and services to customers who want those products and services, it's very difficult to do so when we don't know what the rules are. So a permanent regulatory framework, whether or not we agree with the rules, is extremely useful, not just to expanding the business offerings, but to getting more customers into those business offerings. And the last point I'll leave you with is, at the end of the day, we want more customers to join and use crypto, right? 83 million customers is amazing, but I want 1 billion customers. So how do I get them there? They need to feel safe, that their store of value will be protected. They need to feel like we are a respectable company worthy of their trust. And they need to know that regulators are watching out for any bad actors in the space. And so to get that consumer trust, to get those consumers, to get the next billion into crypto, we need to make them feel like it's not any different than their traditional financial experience. And we do that with regulation. All right, how was that, Piers? Knock it down.
It's some pretty interesting arguments. So let me come in with some counters, okay?
Please.
So the idea that regulation is helpful to the consumer is one that I think is actually not proven to be true a lot of the time. When regulation has come into markets, what it tends to do is reduce competition, and it increases the incumbency of those who are already big enough to deal with regulation, but is actually a market barrier to entry. What you're doing by increasing or calling for regulation in the crypto space is giving advantage to those people who are already in it, who have enough money to have a regulatory compliance arm or can do the things that are necessary. And the other side of this is that, have we really seen governments being able to bring in regulation that doesn't create problems for business in the space? There's been multiple points where regulation has happened too early. Regulation in the energy sector is often poor in a large number of countries. Regulation in the healthcare sector, often in a large number of countries. Idea of rent controls and things like that, which is another economic form of regulation, also causes problems. Now, I understand the need to protect consumers, but I think that often what happens is you end up getting knee-jerk reactions and heavy-handedness if this isn't pushed against very hard. The other thing I'd say is that regulation already exists in the space. We have financial regulation. We have regulations around rules like AML, KYC, and stuff like that. I'm not sure that a new regulatory framework is actually fully necessary for us to be able to describe what it is that crypto does and what the purpose is. What it is for consumers. So I think there's two issues here. The first is the idea of regulating at this early juncture. We're saying, okay, well, crypto's been around for 10 years, but the internet was around for 20 or 30 years before it really started to become something that governments even thought about regulating. And that was, with the Digital Millenniums Act, was probably the only piece of legislation that really went through that had any teeth. And that was a good thing because it meant that there was competition that could thrive within the internet space, and consumers could ultimately decide what it is that they wanted to do with the internet, and that the market forces actually ended up deciding who the winners were, rather than constructing essentially effective trade barriers within a market that is very much in its early stages. And we run the risk of killing the most innovative, people sitting in their dorm rooms thinking about coming into this space and building for the first time by building in these rules that really don't help the entrepreneurs of the space.
Really, really interesting points, Piers. And I appreciate the pushback. So, I think on the first point I'll address is, let's talk about the internet and how the internet has continued to thrive for several decades now. In the past couple of years, across Europe and other parts of the planet, there are now regulatory policies that give consumers the right to be forgotten, right? So with a couple of connections to the largest companies on the net, you can have yourself erased. Photos, identifying information, you can be forgotten. Now, when the internet really came into widespread usage, right? When usage sort of started to spike in I call it the late 90s and early 2000s, nobody ever thought that being forgotten on the internet was anything that you would ever need. There was no need for regulation around that because there was no negative impact to being known on the net. People weren't harassed, right? Or people weren't the subject of scams or targeting by criminal enterprises. Today, we know that it actually can be a very dangerous place. And for some people, especially youth, you do want to have the ability to be forgotten. And so regulation caught up with what was a problem. And I think, in its current form, if you are the provider of, internet services, you may disagree with the right to be forgotten. I'm sure the teams over at Google don't love it because it added a lot of complexity and larger teams and more work. But at the end of the day, for consumers, it's powerful and it's useful. In crypto, when it comes to consumer protection, I'm not necessarily talking about sort of consumer protection with a capital C, right? So I do think that consumers can be responsible for their own financial services. But really where it gets down to the true issue is in the details. So if you have a crypto wallet and you've lost your password, right? Well, if you have a custodial account, that's okay because your provider or your brokerage or exchange will be able to reset that password and get you access to those funds. But if you have a non-custodial wallet and you have private keys, that means no government and no entity can get access to your funds and you lose those keys. Well, then you're in a pretty tough space. And what if your entire life savings or your family savings or your children's college funds are held in that private key wallet? Well, you should have been educated at the forefront about the opportunity, risk, and benefits to having that private key wallet. Now, blockchain, we go above and beyond to make sure our customers understand the benefits and potential vulnerabilities of having a private key wallet. But that's because we're old and we're conservative and we are growing much faster than a lot of other companies in the space. But if you're a new crypto company and you've just sort of introduced a private key wallet, maybe you don't really believe in that level of education. Maybe you're not really worried about it or you don't have the time to focus on it. So whose job is it to ensure a consumer understands the benefits and the risks of having that private key wallet? It is our responsibility and we take it seriously, but we're a multi-billion-dollar international company, so we do. So now, should the government require that new crypto companies in the space also offer that education? Or should we just hope that they do it out of their goodwill? I would prefer that we protect consumers by ensuring they know the risks and the benefits.
Yeah, really interesting point. So I suppose my counter would be like there are plenty of industries that have self-governed and self-regulated for years and done so very well. And I like the idea of introducing laws where a lot of this is UX design. This is good, good approach to customer management, and ultimately it will win customers and loyalty over time. Like, yes, some people individually may you lose funds, but overall you're not adding extra friction into the market by introducing these extra rules that have to be complied with, where actually a lot of this is build better user experience. Like don't end up in a situation where that can happen. And a lot of that comes down to the technology and the tools more than the actual regulations around it. On the other side of that, we are talking about an industry that has literally got together to create DAOs that help Ukraine, that create DAOs that buy the constitution. Are we saying that we're incapable of organizing ourselves around ideas of consumer protection and consumer education like that? That feels like that's like being down on what we as an industry have already exceeded at, and quite positive about what the government's like competence in this space would be. And I think that the whole cypherpunk movement has been one against the concept of government competence, and so like to introduce the idea that government now needs to come into the space and clarify rules rather than going, well, the space itself needs to mature and work out how it should be acting and what should be the best pathways for users. I think there's good arguments on that side of things, but I'm gonna draw the debate to a close. I think just on the conclusion to that, I actually do think there are some things that we need clarification on, but I think they're actually quite small. Like it's like which part of the existing financial regulation applies in certain cases when it comes to selling of like early investments, essentially, which parts of like KYC AML rules apply. You'll be very familiar with things like the travel rule that's coming in and stuff like that. And I think that those like small bits are going to come in. But what I sort of feel very strongly about is anything overarching that kind of like tries to put its arms around the entirety of crypto at this stage. Do you have any closing thoughts on that side of things?
Okay, I think that the positive. So there's no question that regulation has come,
Yeah.
and it will be incumbent upon companies like yours, Piers, and mine to innovate around that regulation. Right. The promising takeaway from it is that when regulation comes, it means that the industry is permanent and here to stay. So permanent regulatory frameworks are the validation that crypto is real and that it is now part of the financial system and that it will continue to be so. I think the executive order coming out of the president's White House in the United States is, for, if nothing else, validating of our industry and shows that what's been built, which you've worked so hard to build, Piers, you and your team, and my team has as well, is now being regarded as a permanent part of our financial system, and that can't be overstated in its importance.
Yeah, I mean, like one of the things I think you guys have seen recently, right, is a pretty impressive influx of institutional money into the space, and I think that regulation is going to continue to give that certainty that more sort of money can come in because there's not so much like uncertainty about is what I'm doing even legal, and that's something that institutions care about a lot more. Can you talk a little bit about how your institutional clients have like built and changed their attitude towards crypto over the years?
Yeah, it's so interesting. And unfortunately, I don't know that there's been enough media coverage of this sector in crypto over the past few years because it has become such a critical component of it. Most of the media we see in crypto is focused on retail and consumer, or
Right.
certainly DeFi, but not institutional. Yet it's over half of the crypto sector now. I think what
Is
happened,
that
probably
true?
it is about 2 years ago, right as we were sort of beginning to come out of the initial hit of the pandemic, was that institutions were looking for a quick reaction to market dynamics, right? They were looking for a quick rebound from what was a pretty devastating economic period for the planet, and saw that there was some interesting yield to be made in the crypto market. Very quickly, we got institutional customers, hedge funds, VCs, high net worth individuals, market makers, those institutions that already had some sort of exposure to crypto. We could call them, crypto native. Maybe they had, asset holdings. They opened themselves up to interesting financial products in sort of the prime brokerage category, right? So spot OTC and derivatives, lending, certainly custody, maybe some margin, on exchanges. They realized that there was a parallel between what they had traditionally used in TradFi and what was now available in crypto. Now, there are only a couple of companies offering these services in crypto, blockchain being one of them, and there's a few others, and quickly moved into the space. And like, birds of a feather, a few institutional customers get into the space and start generating really impressive yields. And then there's just a flood. But what's so interesting is that the current institutions in the space are those crypto native hedge funds and VCs that I already mentioned. They've had exposure to the space, likely in holding some sort of asset. What is really interesting is that we've not even scratched the surface of the entire institutional sector, right? So those funds and those folks in the professional investing space who haven't yet had any exposure to crypto, that is one of the most promising opportunities, and I really think where we're going to see the fastest rate of growth. If you look at sort of crypto comparison, growth comparisons, retail and institutional, retail is growing extremely fast, right? Leaps and bounds, tens of millions moving into the space every month. I think upwards of 20% of the population of major markets around the world. It's amazing. But institutional spending and investment in the space is far eclipsing anything in retail because, they work at higher quantums. So anyway, I'm super excited about where it's going, and really, I think is what's led to so much more of a serious financial focus on crypto.
So half of the space, so like over $500 billion, is now institutional. And like what is stopping more coming in? Like, what are you seeing the biggest like complaints or barriers to entry or things that institutions are going, man, I really like to do this in bigger size, but X?
Yeah. So I think, the first one is, and you hit it on it before, and we don't need to go back into the regulation discussion, but, institutions are, for the most part, investors and stewards of other people's money, right? They have LPs or limited partners or investors into their funds, and they have to follow some pretty strict rules to, depending on their investment portfolio or investment strategy, different levels of risks and risk tolerance and requirements. And so because of that, the regulatory question is one of which they have to, ask very seriously. An individual consumer who may have, a small crypto holding is less concerned about the potential risk than a, institution with, millions or tens of millions or hundreds of millions of dollars being exposed to the space. So that's the first reason, right? Regulation has started to catch up, and it's giving institutions comfort. I think we'll see more adopt the space as companies start to focus on serving institutional customers. So again, 2 years ago, there really were very few companies that were serving institutional customers in any kind of meaningful way. Today, there are a few more, and it's something we are focusing on building pretty rapidly. But there are a couple others that specialize maybe in lending or maybe in a prime brokerage. But it's just starting, right? So the industry is just catching up with the business need.
That's really cool. Let's change tack and talk a little bit about sort of Africa. I mean, like, as you've already said, there's a big actually surprising to people who are not in crypto or big into crypto how big individual and retail investors are in the space. As you said, like 50% of the capital now, but previously it was like 80-90% of the capital was. But we're still seeing hugely fast growth, right? Especially in places like emerging markets like Ghana and Nigeria and Kenya. Can you talk a little bit about sort of crypto.com and your blockchain.com and your experiences in the market with it growing so far?
Yeah, it's fun when like we have such basic names, right? They get pretty confused a lot. No, it's funny. That's all good. So, look, Africa to us is an exciting region for a bunch of reasons. The first one is that there is a large need in in many parts of the region and with many populations for a safe store of value, right? And crypto presents that safe store of value. And what's so interesting is that the use case is very different than what you would see in, Western Europe or in the United States, where, people investing in crypto are looking at it as an investment. And people who are using crypto across the African continent are using it as a safe store of value and for transactions, right? So Tron, for example, is used as a daily currency to purchase products and services and to pay for those products and services. And it's fascinating, right? It's just a different use case. We have a venture arm. We are one of the earliest early stage investors in the space. We fully deployed our first fund into 44 early stage crypto companies. One of those actually is in Africa. It's, I think, the fastest growing crypto exchange across the continent, Yellow Card. We were proud to invest in their Series A and are proud to support that business as it continues to grow. The CEO, Chris, is a really good friend of ours, and we're really proud of what they're building. As we are spinning up the next phase of our venture investing, we are looking very close at emerging markets and how they're able to offer a solution in place of traditional finance. So we're looking very closely at startups starting to spring up throughout Africa as well as in Latin America.
So do you think that the sort of countries in Africa have the opportunity to leapfrog in the same way that sort of China did with mobile first, right? So like all of the products and services were mobile first in China because that was the platform that was the predominant. Do you think that sort of countries in Africa have an opportunity to leapfrog financial services versus what we have in the West because of how the installed base is sort of rapidly becoming aware of what they can do with this stuff, but there isn't like this huge retail banking network in the same way that you would find in the UK or something like that. There isn't this huge sort of institutional investment for retail, institutional grade investment for retail. And a lot of this is crypto first.
Yeah, Piers, I'm so glad you used that example. And for the audience, like we didn't talk about this beforehand, but I think mobile devices is a great example to compare what's happening with crypto. right? Mobile usage jumped over the digital divide and the communications divide in so many markets, whether it's Africa or India or Latin America, and it eliminated the need for wired infrastructure in so many places, and really did put the power of the internet and communication in the hands of so many more people so much faster. The exact same thing is happening with crypto, where there are so many people throughout Africa or other regions and developing parts of the world where there is a true need for financial services. And it's not anything more lofty than just the ability to buy products and services. They want access to Netflix or to Amazon or Spotify. And in order to get access, you need a digital on-ramp, and crypto is that on-ramp. Now, of course, it sounds easy when I describe it. The difficulty, of course, is the on-ramp into crypto, right?
Yeah.
So, as you noted, you do need a place to change that local currency to get it in or get it out until it becomes more ubiquitous. Once, every retailer across all of Nigeria takes Tron, right? We won't be able to exist purely in a crypto digital ecosystem. We still will need fiat currency to transfer between the different assets. But I think we're getting there.
Really interesting. Now, like on the other side of this, obviously there's the adoption of things like Bitcoin and Ethereum, but there's also, there's been an explosion recently in NFTs and adoption of crypto and Web3 via NFTs. What is sort of the blockchain.com view on this, and how are you guys building tools to help people get into NFTs?
Yeah, this is there's so much attention on this space right now, and I think some of that attention is maybe misdirected in where it's really going. So, right, there's lots of excitement about Bored Ape and CryptoPunks, and it seems like every day there's a new record being set in a NFT art type transaction, which is interesting, and I'm glad it's getting more people interested in the space and resulting in a bit of excitement. But I don't really think that's where the future of NFTs goes. Like, there will always be interesting art NFT, and in fact, we're building art installations for NFTs in our new offices, and it is it's fun, it's interesting, and I think it's a great way for people to participate. What I'm more interested in, and I think really why companies like ours are building the technology into our platform, is that NFTs will be the replacement for provenance or authenticity verification for products, and that's really where it starts. Everyone sort of talks about the future. You will be able to own real property, and the validation or the verification of that will be an NFT.
Right.
I think it's a little while before we get there. I think the interim step is, when you buy something of value, whether it's a high-end consumer product like a sneaker or a piece of clothing, or whether you buy a piece of technology like a computer hardware, instead of coming with a piece of paper or a plastic card that proves that authenticity, you will receive an NFT. And so for companies like ours, we're building the infrastructure so you have a place to hold that NFT.
Right.
So I do think it'll be very soon. It'll happen like a light switch, that all of a sudden we'll all have, we'll buy a new laptop and we'll have an NFT that verifies its authenticity, and you need a place to store it.
Right. I mean, like, if you think about it, fungibility actually isn't the common aspect of physical objects. Every physical object actually is unique in its own way, and like one of these things that we do with human society is we also create hexaity around them. Like, this is my water bottle, it's got like a crappy bottom to it, and I know it because it's mine, and I have like a special bond with it. But I think that means that every single object that exists in the physical world can and probably will be at some point represented by an NFT, and then that creates this idea of digital ownership in a way that actually makes sense with a physical bridge. But it's that bridging component that's the hard bit, right? Like, who is making sure that the legal ownership matches up with the NFT representation ownership, and I think there's a long way to go before we get there, but really interesting to hear you guys are thinking on the same right lines as well. So, like, just lastly, before I grab from the from the discussions any points that have been coming up, you guys have been investing. You said you invested in Yellow Card. How do you guys think about investing? If there's anyone in the audience who's hey, like, I need some funds, maybe blockchain.com could invest in me. What do you guys look for, and like, how did you choose Yellow Card as an investment?
Yeah, so I'm really glad you brought that up. So, I mean, first of all, we are actively investing as well as acquiring companies. So, if you have an interesting company, a startup in your early stages of raising your seed or Series A, do reach out, lane@blockchain.com, super easy email address, and let me know. And I'm sure I'm happy to get you in front of our ventures team so they can take a look. And then on the M&A front, if you've built an interesting product, we're certainly interested in acquiring market leaders that have sort of proven themselves and their ability to grow their business, either from a user base or have an interesting technology. We're always happy to talk. I think when we're looking at who we're going to invest in or who we're going to engage in an M&A transaction, we're looking for companies that have a lot of promise in what they've developed initially with their team and their technology. So building a team, that's not that hard. Building interesting technology, that's difficult. And of course, getting lots of customers is sometimes impossible. What we're looking at, on the investment side is, who has built that interesting team and technology? And do we have, in addition to our capital, the ability to help connect them to a very large customer audience, whether it's on the retail or institutional side. And so the fortunate thing about being so old and so widespread around the world in our business is that we can bring more than just capital to the table. And that's really one of the things we're looking for at is like, how can we help this company really expand and grow, whether it's a token or an asset or whether it's a consumer or institutional product. And then, of course, on the M&A, go ahead.
No, I was just going to say, so if you've got a product that you think would be interesting to the 83 million customers of blockchain.com, get in touch.
Absolutely. Yeah. I would love to hear from you. And, for us, we are very focused on expanding throughout the African continent. I think we just hired our first 2 people in Nigeria. We plan on expanding our office there very soon. And so we don't really believe in the sort of traditional tech strategy of just parachuting into a market and trying to run it from outside in some other region. We build teams within the markets where we expand. We bought the number 2 brokerage in Latin America in Buenos Aires just a few months ago and already have more than 200 people in our office there and are really sort of focusing on our expansion across LATAM from Argentina. And we plan on doing something similar in Africa as we start to build our office in Nigeria.
Awesome. All right. Well, just to close up, we've only got a couple of minutes left. I just want to say thank you for everyone who has been adding into the discussion and asking questions. I'm going to pick one question from here, which is, I think, an interesting one to close out with, which is, what are your thoughts on the significance of intellectual property, such as patents, in the space?
Yeah. Look, I think that we have some of the most brilliant minds that are both graduating from school or that are graduating from university or that are currently working at some of the biggest and fastest paced tech companies in the world, all starting to move into the crypto space. And as a result, new technology, new ideas that have never been considered before are being created. Blockchain holds the patents on several interesting technologies. And that has happened because we're able to recruit some of the best and the brightest. I do think we're going to see rapid expansion of new types of ideas, products, innovations, both be created and sort of held tightly by the companies that create them over the next couple of months. Nobody talked about DeFi 3 years ago, right? Nobody had even, I think, uttered the phrase DeFi 3 years ago, except maybe you, Piers. And so, I think there are more sort of innovations that are around the corner, right? NFTs, nobody talked about NFTs a year ago, right? So we're going to see, we're just at the beginning of the new technological developments in sort of broader fintech that comes from crypto. And with that, there's going to be rapid acceleration in the types of patents and trademarks that are created to protect it, which is super exciting, right? We want more activity in the space. It's good for all of us. The rising tide will raise all the boats. So it's good for us all.
I'll add one sort of counterpoint to that, which I think is important. It depends on the kind of business you're building. So from my point of view, a open source public ledger, which is what we're building, has to be given away, has to be open source, because everything about it is about giving something that the entire world can benefit from and can build on top of. And you can't have any proprietary part of that because people just feel like you might be able to rug pull them. So why is Linux the most used operating system in the world? And like, you can argue the toss on consumer side, but on the back end on servers, it's because it's open source and because there is no barriers for innovation being able to build on top of it. So if you're building a foundational piece of technology, yeah, I'd strongly consider not patenting. And it's actually something we did in the past, and we've decided to move away from that because we've sort of really gone deep into this and realized that the only way you can build something humanity can rely on is by doing something that has to be given away, that you can't subsequently take a right away from them in the future. But if you're building something else, if you're building a for-profit business that has a specific subset of users for which there doesn't need to be complete transparency about what you're doing, yeah, this is definitely something you can think about. But be careful where you are in the stack, and be very careful about, for your business, whether or not it's the right decision, because you can end up spending a lot of money and not actually get anything out the end of it.
Yeah, look, I agree. The radical disintermediation of the financial sector from crypto cannot be stopped by any one entity or any one product. And that's the value in crypto, right? Is the openness of it and the accessibility to anyone, anywhere in the world, regardless of their socioeconomic standing. But at the same time, bigger companies that are able to succeed are able to expand the mission and reach. And so we should support, both sides.
Yeah. Lane, it's been such a pleasure meeting with you and getting you on this chat. Thank you so much for your time. Thank you everyone who's attended in the audience and come along and asked questions and put up thumbs. It's been great to see that. So I look forward to speaking to you again in the future and hopefully meeting you all in person at some point.
Wonderful. Thanks everyone. Thanks, Piers.